All right, guys and gals out there all across the country. I mean, when I was looking at something, we have investors in over 30 states across the United States, including Hawaii, Alaska, people in a couple different countries, Canada, United States, Mexico, and a couple people in Europe joining in today here at Note Camp. And I could not think of a better expert to have on here, somebody who I respect, known for a while now, and is absolutely just an amazing individual, probably the smartest guy in the note industry. He won't accept that, but I will guarantee this guy is in the top 1% of 1% out there. He's the president and CEO of a company called US Debt Ventures out of Fort Lauderdale. He's created and managed 8 investment vehicles and invested in over 1 billion. That's a B, billion. That's what we should call him, Todd Billings, not Billings. And distressed debt, and done an amazing job with that out there. He's also got his degree at Johns Hopkins University, and also went on to get an economics degree from Stanford University. And actually, I hope he tells the story how he got into the note space, maybe a little unwillingly at first. So we're honored to have our buddy Todd Billings join us from South Florida today. What's going on, Todd?
Hey, what's up, Scott? Awesome to be here, and always a pleasure to be with your group. And I learned something from your guests, and I hope I can impart some knowledge to the participants today, and we all make some money from this crisis. And obviously, there's opportunity here, which we'll talk about today. A little bit about me: I grew up in South Central Los Angeles, and it's really interesting given the times that we're in. Both my parents are from the South. My mom is white, my dad's Black. Mom's born in Nashville, Tennessee, dad from Clarksdale, Arkansas, right outside of Memphis. And they met in California, and I was a product of a, real civil rights kind of family. So we grew up with just, equality was going to come from us working together and being together. And so this whole issue is really interesting. And I'm just excited to be here and know that, there is a path forward. We all will get through this. Things are better today than there were. And so I always try to just keep that in mind that, we can't allow the media or anyone really taint our vision around the world is getting better. There are going to be great opportunities. The world's not coming to an end tomorrow. So let's look for those opportunities right now. So I grew up in South Central, first person in my family to go to college. And ultimately, the Cosby Show was big as a kid. So it was like, you should be a doctor or a lawyer. And I said, well, I guess I'd rather be a doctor than a lawyer. No offense to any lawyers out there. And Johns Hopkins and Harvard had the two best med schools. Ultimately decided early decision to apply to Johns Hopkins. Got in there, but I was always fascinated with Wall Street as a little kid. Math was my best subject, and as a kid, my parents tell me when I was probably 9, 10 years old, I would ask every day for 25 cents to buy the paper so that I could read the stock charts. And I taught myself to read the stock charts. I knew MCD was McDonald's, KO was Coke, PEP was Pepsi. I remember Michael Jackson started doing Pepsi commercials, Taste of a New Generation. And it was just a little game. It was an escape from South Central LA. And it was a little game that really made sense to a guy who loved numbers. And so I did that, but I had no direction. I didn't have any mentorship around here's a career on Wall Street, or here's a career in the note business or private equity business. So went to Johns Hopkins, and I remember leaving a party one day, and some of my friends were saying what they were doing for their summer internships, and they were deciding to work on Wall Street. And I said, my ears perked up. I said, really, this is what I've been wanting to do my whole life. And long story short, there was a program that was in New York. You had to be a resident of New York to do the program. And fortunately, my roommate lived in Queens, New York. So I used my roommate's address, stayed with him during the summer, at least for half the summer. I had another friend who lived a little farther up in New York. And between the two families, they really supported me to get my start on Wall Street. Once I got that opportunity, I was working for Bankers Trust right downtown at across the street from the World Trade Center. And from there, it was really just love at first sight. I mean, this was a true meritocracy. It didn't matter whether you were white, Black, green, as long as you could make green, everyone loved you. And it didn't matter if you're old or young. The head of the desk, I believe, was like 30 some odd years old. And to see a guy in his 30s making millions of dollars, I was like, this is the place for me. So decided I wanted to pursue economics, not pre-med. And the best school at the time was Stanford. I applied to Stanford, transferred to Stanford, got a degree in economics, graduated there in '95. And then from there, got a job with the following summer, I was working with Merrill Lynch on a rotational program, got to go through tons of trading opportunities. After that, I worked for Merrill Lynch when I graduated from Stanford, doing investment banking, did municipal finance. After that was a municipal bond trader for Payne Weber, now UBS. And then I got an opportunity to finally do what I really loved, which was trading. I got an opportunity to be a NASDAQ market maker, have my own book of business, and made a ton of money as a young man. I mean, growing up in South Central, I thought, you know, 50,000 a year was rich to me. And here I was at 25, 26 years old, making 500-600 grand a year. So it was like I got to a place where, you know, I was very financially successful, at least in my own opinion, and was looking for more. Ultimately, ended up finding my wife, getting married, starting a family. During that process, moved to Florida, and I decided to work in the what business was that? The financial advisory business, again with Merrill Lynch. So started managing money. So to make a long story short, to get us to where we're headed, during the last crisis in 2008, for the first time in my career, I was working at the time for Bank of America Private Bank, US Trust, and I had clients asking me, Todd, is my cash safe at the bank? And what do you tell a client when you know everything you've studied was we're all bankrupt? The Bank of America was bankrupt, Wells Fargo was bankrupt, Citibank was bankrupt. They were all officially bankrupt, at least from a numbers perspective, and it was only by the government propping them up that they were not put out of business. And I remember telling one client of mine, I won't share last names, but just to make the story better, his name's Floyd, and Floyd said, Todd, is my money safe? And Floyd would always keep a minimum of 25 million of cash with me, and I structured his accounts as best as I could. He had $5 million of FDIC protection. And that meant if Bank of America went out of business, at the time he had $30 million with me, he would have lost $25 million. And I told Floyd, no one's going to feel sorry for you if we go out of business and you lose $25 million. And he said, well, Todd, what should I do? Long story short, I went through options, take this structure, go to multiple banks. He said, I don't want to do that because I'll just have more salespeople calling me. What else can I do? Said, you could buy treasuries. But don't buy them from me because if I sell them to you, we lend out securities and then you'll get caught into bankruptcy. So what else can I do? So ultimately, we decided to send his money to a really cool site called USTreasury.gov where you could wire your money directly to the Treasury. And that's what he did. The bad part about that was I made less money. Mm-hmm. And so for the first time in my career, I was really stuck and like, what am I going to do? I had this issue where I'm trying to give clients the best advice, be honest, because without my clients, I have no business. And at the same time, I can't toe the company line when I don't believe in where we're at. I mean, fortunately, you know, Bank of America survived, but we didn't know that at the time. After that, I told my wife in October of 2008, I need to make a change. And she said, what is that? I said, I've been reading about these things called family offices. And the key word of the family office was alignment. And the idea was I wanted to be aligned with my clients. So, hey, if they make money, I make money. I want to be able to tell them the truth. I didn't want to say, hey, you know, I don't want them to know about Citibank having a better deal than me because I'm at Bank of America. I wanted to work for the families, on behalf of the families, and get paid to do the best thing I could for the family. So that's what I did. And I started with a little $500 a month office, no windows. And I had a tough non-compete agreement with Bank of America, as you all can imagine. But fortunately, everyone had my cell phone. And over the course of a year, 6 families came to work with me, ranging from 10 million of liquidity to over $1 billion of liquidity. And it gave me my start. And a year into it, one of the families brought a pool of mortgages to me and said, hey, Todd, what do you think about this? Said, let me look at it. And it turned out we were going to be able to buy this pool of mortgages for around 25 cents on the dollar. And I said, hey, this is too good to be true. I cannot believe we can buy mortgages, first mortgages, for 25 cents on the dollar. Looked into it. It turned out to be a sale from Wilbur Ross's group from Bank United. So I said, it really weighs more hairs on my head, even though I have no hair. I said, I said, Wilbur Ross has some smart people, so why am I getting such a good deal? Why would they sell this paper for 25 cents on the dollar? It turned out they were the beneficiaries of one of the first FDIC loss share agreements. At the time, Bank United had approximately $3 billion of bad assets on their books. The FDIC basically said to Wilbur Ross's group, hey, you take on the first billion, you take 20% of the loss, and we'll take 80% of the loss. And on the next 2 billion, we'll take 95% of the loss, and you take 5% of the loss. So I said, oh, wow. So when Wilbur Ross's group sold this pool of mortgages to me for 26 cents on the dollar, they booked an accounting profit because they own these assets anywhere from 5 cents to 20 cents. I bought them for 26 cents. So he made money. We made a ton of money. And guess who lost? Us, we, the taxpayers. And so, listen, this is reality. This is what happens in crisis. Opportunities come and opportunities fly away pretty fast. And we really took advantage of what was going on at the time. So I went around searching for more and more deals. We bought this pool for 26 cents on the dollar. It was a $20 million, $19 million investment. And 11 months later, we were out for $30 million. We bought our first 178 loans. And after that investment, four of the families in that partnership said, Todd, can we do this full time? Looked at the numbers. We had bought, what, 60 some odd $1 million worth of paper. And I figured there was about, I forget, it was like 900 billion or there was some enormous amount. And we bought such a small piece that I said, there's a whole business here. So I took a year to wind down my family office practice. And we went out and formed a company called US Debt Ventures, USDV for short. And through that fund, we purchased, 7,864 non-performing mortgages in all 50 states in the country. And it was just shy of $1 billion of those mortgages through 7 different investment vehicles. And then our 8th fund, we started a bridge lending fund where we've done probably 350 million or so of bridge loans. So fix and flip, new construction, commercial, rentals, you name it. We've done those. And, but 7 or 8 of our 8 funds have been distressed funds. And so we started winding down our latest fund about 15 months ago. The idea was we've had a long real estate bull market. We've had a long stock market bull market. We're going into a presidential election and our country is very divided. And whether you like Trump or not, the fact is, as an economist, a lot of the policies, deregulation is very positive for financial markets. And so we live in a place where if this administration changes, many times people are just going to throw the baby out with the bathwater and just say, hey, we're going to just do the opposite. So we, as a group, started to unwind our portfolio. Our current fund has 3 investors, 2 billionaire families, and 100 million plus family, and started winding down the fund. We're probably down to our last, $20 million of assets at this moment, which I'm so grateful for. Had no idea the coronavirus was going to come, but we did know an election was coming. So we've been preparing for this for some time, and I've already started to speak to investors about distress. So happy to really get into today how I can help the group, help all of us, navigate this time. Happy to answer any questions, and can probably tell many, many stories along the way around opportunity. So that's a little background on me. Personally married to be 20 years in July. Have 5 kids. I have a 9-year-old son, Elijah, 13-year-old daughter, Milani, 19-year-old son, Keon, 23-year-old son, Darian. And then we have a bonus child that we took custody of, Whitney, who's 31. So 5 kids, 2 dogs for good measure. And if you see a little sweet rustic sign, it's my wife's bakery here in Fort Lauderdale. So one of my pleasures today is getting to really help her grow her business. And so that's a little bit about me, guys.
That's awesome out there. Yeah, people are already excited to hear from you. When we've got such a good mixture, we've got some very seasoned investors on here joining us, and we've also got some very brand new people. So why don't we start we go back to that $500 a month, no Windows Office, and some of the things that you started off, because I think there's a lot of similarity into raising capital, doing like that, and also in today's market. What are some of the best? What's the best advice that you would give people out there looking to raise, let's say, their first $500,000, $1 million from investors for future deals? We all know that the market's kind of in a limbo, waiting to see what's going to happen. Yeah. But I think the time to market and get the word out what you're doing and what you're looking to do is one of the most important times right now for the next 6 months.
Yeah, for sure. Absolutely. So I've raised tons of capital, both equity capital from private investors, and then at the same time, debt capital from institutional investors. And so raising capital is critical. Everyone needs money. So I don't, my investors who are billionaires, we leverage our return. So there's I think number one, the first step is just get over yourself, get over your ego, and just say, hey, I need to ask people for money, which is never comfortable. There's no easy way to ask someone for money, because when someone asks you for money, it's like, well, what are you going to do with my money, right? I mean, there's a natural, I don't want to say distrust, but there's a natural hesitancy for people to trust someone else with their money, because there's no immediate reward. When you come into Sweet Rustic Bake Shop, I'm going to give you a cupcake, a cookie, some dessert. You get immediate reward. You buy a new car, you get the new car smell. You hand me $1 million, like, I hope I did the right thing, right? And so I think step one is just realizing that it's scary not only for you to ask, but it's probably even more scary for the investor to trust and say, hey, I'm going to hand over this money to you. And so I think step one is just realizing that exists, addressing it, and then being very real. I mean, when I started, I remember when I started in the $500 a month office, one of my clients, he's become like a father figure to me now, he was born in 1919. So I guess he's what, 80, 90, 80?
He's 99.
Oh, sorry. 1939, excuse me.
Oh, okay.
1939. Yeah. Sorry about that.
81.
Yeah, I'm 80. I'm aging him. He'd be really mad at me for that. So long story short is, I remember raising some money and he decided to invest in me. And I had another investor who believed in what I was doing with the family office business, and he was my very first investor. And my partner, Nick, who's an Italian immigrant, worked really hard, never went to college, made a ton of money, runs $1 billion business. And I remember him saying to my other partner, Ken, who's Stanford grad, super smart guy, I'm excited to get these guys together. I'm like, I hope I can get some more money. And the first thing that comes out of Nick's mouth is, I don't know if we're going to make any money, but I really like this guy. and my ego was shot, because here, when you're the investor, you're like, you're so confident that you're going to make money, right? You have to have that confidence to even take money from someone else, unless you're just going to be a scam artist, right? So if you have to have the confidence that if I'm going to take 100,000, 500,000, $1 million, $1 billion, I don't care what the number is, that I'm going to make money with it. And my ego at the time was shot, because I'm like, how could Nick say this, especially in front of another investor of mine? But looking back, he was so right. And my ego aside, the fact is, he invested with me because he saw something in me that he believed in me, right? So step one is find people who believe in you. There's a ton of people out there. Not everyone's going to believe in you. You don't have to convince everyone. You need to find people who believe in you, that you can build trust with. And that was really step one for me. And after that, and after you earn that trust and you build that trust, those people are your best advocates for new clients. So Nick introduced me to a friend of his who was a billionaire, and that guy introduced me to another friend who, these guys are like, well, Nick had a lot of money. And then Nick said, you need to meet so-and-so who has a lot of money. And so it becomes a domino effect by just being good at what you do. And the first fund was the hardest. My first capital raise, it was the hardest raise of all. I spent the most time, the most effort in my first fund. I think we raised $5 million. And then very next fund, or I should say the last fund, we raised the most money, and it was the easiest. So, I mean, with time and with track record, things do get easier, but the first step is finding those people who, one, believe in you. Hopefully they believe in your strategy too, but it's less important that they believe in your strategy as much as they believe in you.
Mm-hmm. Now, I know with your first really big trade, that was predominantly a Florida-based pool, if I remember correctly.
Correct.
From what you talked
Yes.
about.
Yeah, it was all Broward County. So Broward County is like the Fort Lauderdale, Miami market. So for those of you, depending where you are, most people will know Miami, southeast corner of Florida. And then Broward County is just north of that, like 30, 40 minutes north of Miami-Dade County. And so all of our paper was in those two counties. And so it was right in our backyard. It was a great pool for us. People were very scared because there were a lot of foreign national buyers. So we had all the things against us, which was, we don't know if mortgages are going to be valid. Was there robo-signing? Why are they selling so cheap? Will they just invalidate all mortgages? Can you even foreclose on these things? And on top of it, these people aren't even US citizens. They live outside of the country. The reality was, this was probably one of my best performing pools, because when you think about it, if you and I go to Europe to go buy a condo, we're probably doing pretty well, right? We're pretty financially savvy people to go to another country, especially a country like the United States, to buy a property. So these people were some of the best people to work with, because it was just a financial decision for many of them. And so whether it was a short sale or a deed in lieu, or many of them just paid me in full, because for them, it's like, oh no, I'm getting sued by, somebody in the United States, and I want to get back to the United States in the future. So some people just paid the whole thing, even though I bought it for 26 cents on the dollar, they paid me whatever. And so there were some real shockers, whereas US borrowers were like, let me go find an attorney for $400 or $500 a month to defend me. And it took me 2, 3, 4, 5 years sometimes to get to the property. And so I say all that just to say, a lot of times what everyone can, there's herd think. We talk about herd immunity these days. There's herd think when it comes to what's safe and what's not safe. And sometimes you just have to really do your homework, and you have to think for yourself. And sometimes you also just have to get a little experience and say, hey, what's the worst case scenario? I mean, step one for us has always been, in every investment, is buy right. If you buy things with intrinsic value, you are already ahead of the game. So people say in real estate all the time, you make money when you buy. Notes or mortgages, right, backed by real estate. So you make money when you buy.
Yeah, that's a good point. Now, in that time that you were winding down your office and getting ready to go into this stuff, I'm sure you were spending a lot of time putting your teams, your vendors, your processes in place. So for our new people out there, where we've got a 5-6 month, kind of learn up till before probably the government decides anything, before the elections arrives, how critical are putting your teams and really starting to market your team if you have no experience? How important that is, Todd? Is that Todd?
Yeah, I mean, I think there's a couple things. I think number one, don't make yourself out to be bigger than you are, because your first few investors are going to be people who believe in you. So I think if it's a one-man show, market a one-man show. If it's a one-man show with a few people that are key players, that if you get this or that, they'll come aboard with you, then market that. I think step one is being honest. And, there is an old saying that is fake it till you make it. And there are times where fake it till you make it works. I think when it comes to raising money, people see through things very quickly because they're handing over money, right? I think it's a place where you cannot afford to fake that part of it early on. I think what you do need to do is, have your team in place in terms of, hey, who are the critical pieces for this business to work? And what's the process by which I will hire additional people as this business grows? So for me, when I first started, first step was I knew I needed an investor relations person, because you cannot take people's money and not be responsive to questions. And so I needed someone who, at the time, Amanda, who works with me, she's been with me, goodness, since she graduated University of Washington and she's still with me today. And so, you know, I think she started with me back in 2005, maybe. I don't know. She's been with me 15 years, give or take. And the key there is, you know, find people that are going to be able to do multiple things, because it's a small company. So obviously I knew I had someone who could support me, be somewhat of an assistant, although her role is not an assistant. Today she's managing director of my company. But two, she could really manage the relationships, because you have two different things going on. One, I need to go take this money and do something with it to make money, which takes a lot of time, effort, energy. And then two, I have to be responsive to the people who gave me the money. And when they ask questions, if I can't get back to them, even if I'm doing things that are important for the business, they may look at that as, you don't care about my money and you're doing something else. You're goofing off, right? And that may not be the case at all, but being able to give answers to your investors becomes very critical. So that was step one. And then I had a line of, you know, I knew the next person was a capital markets person who's going to help me go talk to all the banks, and who's going to help me with getting these non-performing assets performing again, or non-performing assets into real estate. And then it kind of snowballs from there. So I think, just think about, hey, who are the 2 or 3 other people that I'm going to need next? And investors, surprisingly, are very understanding of you being wise and frugal, right? I used to think I had to have the really nice office, and I had a really nice office and spent, you know, tons of money, probably more money than I ever needed to spend on an office. But, you know, later in the latter part of our fund life, we got into using, like, there were some really nice kind of WeWorks. They weren't WeWorks, but, you know, the co-working locations. And I was scared, because I'm like, what are my investors going to think about this? What are the banks who lending me $100 million at a clip going to think about this? And surprisingly enough, culture shifted to the point where people were able to, I think, not only support it, but really see that it's wise. So, you know, me spending $12,000 a month for a lease that's fixed for 5 or 6 years, and you have a fixed amount of space, a fixed amount of parking spaces, you're stuck. Being in a place where you can grow, wax and wane as you need to, it also, you know, comes back to like, hey, what kind of business person are you? So I think there's time to, once again, this goes back to, do I need to project something that I'm not, or can I be who I am and where I'm going? And I think the more you are you, the more you can speak your truth, the easier it is going to be for you to know, hey, this investor is right for me and this investor is not. Both sides have to work, right? I mean, it can't be one way. You cannot go out there saying, you know, like there are a lot of financial advisors when I worked for Merrill Lynch, they wanted to take money from anyone who breathed, right? And I get it. I mean, we all need to make a living, but the reality is when you start getting into, you know, private vehicles, it's private, right? I mean, we're not just earning a fee off of, you know, the money. It's a different level of relationship and fiduciary responsibility. So you need to make sure you want to work with those people on a daily basis and have to answer to them, because those really are your new bosses.
Yeah, I love what you just said there. It's definitely important. But I think one of the most important things I think people need to hear too, besides communication and answering, but also the delegation that you talked about doing. You weren't going out there and trying to do it all yourself. And I think real estate investors are egomaniacs. Have a hard time in delegating tasks that can be done, the contacting the banks, the raising the capital, the doing the due diligence on the files. I've been to your office in the past, and you've got a team that, you know, you're looking at the final overage, but they're the ones doing the nitty gritty, the spreadsheet manipulation and all that stuff, right?
Yeah, exactly. And so, you know, I think it's, there is, it's funny, my 13-year-old daughter, Milani, she's reading a book by Adam Smith. I guess they just finished school recently, but Adam Smith, and she was reading about the division of labor. And what a great concept the division of labor is, right? Which is, the more we can do our thing, just think, you know, factory, you know, automated, you know, car making. I think there's a video that shows a Ford F-150 being built in like 53 seconds or something on YouTube, which is pretty amazing. But nonetheless, the idea is, the more we are in our lane, if my primary lane is building confidence with investors and speaking to investors, that's what I need to be doing. If someone else's lane is, I am really good at the analytics and getting all this information into a spreadsheet to where others can make decisions from it. Let them be in their lane, because you get better and better and better at what you do. You're more efficient. I mean, the first pool of loans we bought was 178 loans, and we managed all of that out of Excel. The very next pool we bought was 6,851 loans from Citibank.
That's a bit of a jump there, Todd. I mean,
oh my gosh.
Somebody might think that you're an overachiever a little bit, to going from that to starting off small and going big. You have a whole different definition of small for most people.
Yeah, exactly. So it's funny because I remember the call telling, the team we had put in our bid. I get the word back. We bought this pool from Citibank. It was, we called the investment the 500 group. It was actually a $499 million pool, but we were just shy of 500 million. So we called the investment 500 group. And long story short, we were high-fiving each other, and then we got off the phone, and it was like a sobering thought. What did we just do? Like, how are we going to manage? Yeah, like, how are we going to manage? Like, have any of us thought about how we're going to manage 7,000 loans? And like, just think, right now we've been managing it. I had this master workbook in Excel, and I'm pretty good in Excel after being an analyst, working 9,500 hours a week when I was, my early 20s. But now, going from 178 loans in this huge spreadsheet to 7,000 was like, this is not going to work. I mean, it just won't work. And we ended up, and I was the kind of person that I'm a people person. So I solve problems and accomplish my goals through people. So my first step was like, I need to hire this person, this person, this person. And fortunately, a good friend of mine started talking to me about databases. And we started building out our own database. And we spent millions of dollars building out our database to where when at the top of our loan acquisition, we probably had about 8,000 loans at any given time. We did that with 10 people, right? I mean, and the ability to manage that many loans, and that included an admin assistant, a full-time attorney on staff, capital markets person, myself, investor relations, 2 analysts, and I can't remember everyone else, but the fact is that was a core team right there. And we were able to manage it because of having a database and having systems and leveraging technology. And that's how we ultimately were able to make a lot of money, because if you look at your P&L in any business, usually the highest expense is labor. And so to the extent you can cut your labor costs, it's going to save you a ton of money, i.e. make you a lot of money on the other end, just by leveraging technology. And so that's what we did. And it was a learning process. It probably was a few years before the team ever gave me like editing rights in the database, because they didn't want me to mess anything up. But it was a great experience. And today we still use the same database today. And that all that time, effort, and energy, I've had companies, servicing companies, different people try to license our database. And at a certain point you just say, hey, this is ours, this is what we use to manage our business. And as much as I'd like to sell it, that's not my business. I'm not in the software selling business. I'm in the money making business from managing these assets. And so today, for us to be able to manage thousands of loans with less than 10 people is huge. I mean, that's how you make money.
Right. And I'm sure you're probably using some vendors. You're probably relying on vendors to help you out with, or maybe virtual assistants too, to help out in some of the low dollar scrubbing things time to time, or no?
Yeah. I mean, things change over time. So in the beginning, it's like, well, how do we get valuations on a pool? In the beginning we'd get a request to bid on a pool, and we had to bid on it in 7 to 10 business days. Right. And then if you won some of the first pools, you had to put a 10% non-refundable deposit down. And so it's like, oh man, I mean, I better be really confident not only in my bid, there's no retrading here. And so, we used places like, at the time, Clear Capital was one of the first, BPO vendors. And then it's like, how can I be conservative with my BPOs? I'm not getting internal appraisals or access to these properties. And so, it's like, okay, well, we use 30-day quick sale value. So learning to handicap, and were those BPOs right? No. I mean, let's just be real. It's a BPO. It's a realtor driving by But overall, as a portfolio, did it work? Absolutely. So, if you're going to hold those BPOs to that individual asset every time, it's not always going to be the best. Obviously, if you have the ability to do your own work, there's a lot of ways to be a lot more efficient, and I'll say accurate in your evaluation. But when you're running, thousands of loans and bidding, there comes a time where you also have to say, hey, when things are crazy and when people don't know what to do, am I willing to put my money in? Because let's just go back. Let's think about this. One of the first pools, or the first pool we bought, 26 cents on the dollar. So take $1 million condo on the beach. A lot of them were on the beach. $800,000 mortgage, standard mortgage. Value had dropped from $1 million to $600,000. We bought the $800,000 mortgage for $200,000. Okay, maybe my BPO is wrong, right? Maybe it's not worth 600. Maybe it's worth 500. Maybe it's worth 900. Maybe it's worth 400. The fact is I was buying it for 200. Do I think it's worth more than 200 is the question, right? And so there's the opportunity in crisis. Part of that is that you don't have accurate, perfect information all the time. What you have to be able to say is, when I was a trader, the first thing they taught us was your capital is your business. If I lose my capital, I'm out of business, right? And it's very clear in trading because you trade with money every day. So, in the same way here, you make money by protecting your capital. So my first step was, am I going to lose money paying 26 cents on the dollar? I just said, I can't believe that $1 million condo is going to be worth less than it has to get down to 200,000 for me to break even. Mm-hmm. And worst case, I still probably will take over a condo on the beach in Miami.
There's not really a downside to that.
Right? I mean, now you're going to have so many other people. Well, the tides are rising and the Antarctica is falling apart and there's not going to be a shoreline anymore. And California's going to break off into the ocean. And listen, a lot of things can happen. We've all seen the crazy movies. I can't control those things. What I can control is those little things, which is, am I protecting capital on the way in? Can I protect that? And then it's all upside from there. So, out of all of our funds, you don't always make a ton of money. But the one thing my investors can always say is Todd doesn't lose our money, right? And I'll say that's really critical because you live to fight the next day, right? I mean, you have to be available to win the next time around. So now when we have this next crisis, can I call up investors and raise money? Yes. Why? Because I have a track record of doing this.
Yeah, and that kind of leads us to the next aspect question I want to go into. Where are you if you, I know you don't have a crystal ball, you got a pretty good pulse for the market because you've already evolved and done some things. Where do you, there you go, rub your head there. This I got the Corona cut going here, but you started doing some private lending, doing some mezzanine financing on the debt space there. Do you see buying some of those loans from the hard money lenders out there that are kind of in this limbo right now? Or where do you see some of the opportunities here, maybe say the next 6 months, and then we'll talk about maybe a year?
Yeah. So 2 things. Number one, I think patience is critical. So, there's always opportunity. There's opportunity today, right? We can walk out and find opportunity today. But we're going into uncharted waters. None of us have seen what is going on. I mean, unemployment at some historic levels. I mean, overnight. The Fed printing money, not only the Fed, but global, central banks printing money like there's no end to paper. I mean, I think we're entering a time where, are we in a deflationary environment or are we going into an inflationary environment? I don't know, right? The fact of the matter is there are going to be opportunities, and step one is to be patient and figure out, hey, what's my niche? What can I do well? And sometimes I have great relationships on Wall Street and I can go buy a whole pool of $500 million worth of mortgages from Citibank. I won't be able to cherry pick. I'm gonna have to take it all and deal with it. The other might be, I can own my market. I know Austin, Texas, or I know Fort Lauderdale, and I'm gonna know every single block over here. And so for each of us, we have to decide, where is my strength? Where's my little, arrow that works for me, that allows me to have a competitive advantage against everyone else. And so having done so many different things, I think the first opportunities when you think about, hard money or the fix and flip space or these commercial bridge loans, I've seen a lot of paper come out primarily from margin calls. So the first step has been guys who've been levered when they're originating loans. They lever that, then they sell those loans, and now they got stuck. There was no exit for the loans.
Right.
So, but at the same time, no one wants to lose money right away, and real estate hasn't just tanked. I mean, I think the best minds are thinking we probably see anywhere from a 0 to 15% kind of decline in prices depending on the market. And it's a very localized thing. A friend of mine in Salt Lake City put her house on the market and it sold in one day. So, another friend of mine's building homes in Boise, Idaho, and they can't build them fast enough. So, you can't just throw everything together into just a bucket and say it's all the same. But what you can do is say, hey, here's my niche. This is what I can do, whether it's relationships, whether it's knowing my location, knowing my market, and then focus on that and be the best at it. And that's going to do a couple things. One, you're going to not waste your time. You're not going to waste your investors' time. Your investors are going to have more confidence in you. I remember going to a conference and, I had done a lot of big things already and had managed thousands of loans. And I remember going to a conference and there was a guy here locally in Miami who we've now stayed in touch for the last 10 plus years. And he said, I go and visit every property before I buy it. And I was like, wow, that sells me, right? Like that was a nice selling point for someone staying in their lane. Like for him to try to compete against me and say, I'm going to go buy thousands of loans from Wall Street, and he doesn't have a Wall Street background, hey, that's not as believable. But as a professional, I said, that's the guy I want. I would give my money to the guy who says, hey, I'm going to look at every property before I buy it in my backyard, right? Whether it's a note or a property, right? And so I think finding your niche is critical for not only yourself, but then also for your investors. And ultimately knowing that, hey, maybe I'm not getting 26 cents on the dollar on a big pool across a big place. Maybe I have to pay 50 cents on the dollar. So don't worry about the next guy's deal. Worry about your deal, right? And if I look back, the one thing I remember when we started getting up to like, we bought 26 and then the 30s and the 40s and then in the 50s. And then we're like, we're not going to pay more than 60. We refuse to pay more than 60. And there was a great deal that we should have bought. And we were like, no, we're going to stick our bid and we're going to stick at 59 cents. And sure enough, guess what happened? I lost the deal. It traded at 60 cents. We had underwritten it where we knew we were going to make money, whether it was 59 or 60. Was that really the difference? And I look back, that's one of those deals you look at, you're like, the market kept going. It kept going to 75 cents, right? And so it's like, why was I being greedy, right? Why was I being, find your niche, find your market, and then just go with it. And you have to, early on, that's when you have to be aggressive. You find where you're good at, find the opportunities, and then don't hesitate.
Yeah, I can think of when you said that, I was going to ask you a question. What was the deal that you got? And I think back to Miami condos. And that they wanted 75 cents back. And I was like, oh no. And the market was on the rebound. I was like, oh no, I can't go above 70. And sure enough, they doubled in value over the next 12 months. And I would have been at like 37 cents after everything was said and done. It's like,
yeah. Absolutely.
But that's the thing in knowing the trends and being flexible. You said something there earlier on too. And I think what's important is people realize that, hey, not every deal is going to be a home run, especially when you're buying in bulk. You're going to have some really great winners. You're going to have a lot of singles and doubles. You're going to have some that you lose money or you just get rid of, especially when you're buying in bulk. You have that kind of that three levels to your pool. Your top 25%, you help make your investment back. You make most of your money, though, on that middle 50, 60%, that bottom layer. You're just breaking even and trying to make lemonade out of that stuff. Right, Todd?
Yep. Yeah, I mean, the word is always the tail, right? I mean, and whenever you buy a bulk purchase of assets, the industry jargon is, how do you deal with the tail? And the tail is the last part of the pool, because, you know, in the beginning, you get to see all the good stuff. It's like, oh, we just made money here, we made money there. And then at the end, it's like, darn it, I've been working with this guy trying to foreclose a squatter in my house in Brooklyn for 5 years. Like, and the courts aren't helping me. Like, get a guy, like, he doesn't own it. All he did was put the water in his name, and I can't get him out. Like, there's a point in you where you're like, I'm from South Central. I'm about to call some people I know. We're going to get this guy out, right? There's got to be a better way, right? But, you know, you have to get over that ego and just deal with it. And you know, this is like real life Monopoly, right? I mean, Monopoly was my favorite game as a kid. And the fact is, you know, you have some boardwalks and you have some park places, but there's some Baltics and some Mediterranean avenues too, right? And the funny thing is, you're dealing with people, right? And people are as creative as, you know, on the good side, and they're just as creative on the bad side. So we can come up with new schemes or new things, but, you know, as soon as we create something new, somebody else figures out a way around it. So, you know, the fact is, have I made money on all my loans? No, I've lost money on tons of loans. It reminds me of that old Michael Jordan commercial. I failed over and over and over again, right? And the fact is, I failed over and over and over again, and yet that's why I succeed. And so don't be afraid to fail, right? I said that, and I can't help but hear the Austrian voice of Arnold Schwarzenegger, and don't be afraid to fail, right?
Don't be afraid to fail. Get to the chopper.
Yeah, exactly. And that's it. I mean, you can't be afraid to fail. You're gonna fail, and you can't take any one deal too seriously. The fact is, if you go in with the right mindset and strategy, which is, you know, I take it back to trading. When I would trade, and let's just use, I don't even know where stocks trade today, which is one of the best things. But, you know, let's say you're gonna buy a stock and you bought it at $100, but you know that every time the stock gets to $95, it just never goes below that, right? For whatever reason, right? So if I can buy it at $96, I'm taking $1 worth of risk. And my rule of thumb was, if I'm going to take $1 worth of risk, I want to make at least $3 worth of profit on the upside, right? So that means I could be right 33% of the time, and I'll break even, right? Most of us, we want to be right. Right? Our ego feeds us to where I want to be right all the time. Mm-hmm. And the one thing Stanford taught me was, there are a lot of smart people out there smarter than me. As smart as I was, like, I remember one class, game theory, I went into, and Stanford had this great policy, which was they weren't going to cancel any class due to size. So if everyone wanted to take it, great. And I remember being in this room, and it was standing room only, and the teacher says, well, because we have so many people, you know, our policy, we're not going to tell anyone you can't take the class, but we're going to have to grade it on the curve because we can only give so many grades. So 1/3 of you are going to fail this class. So I would just recommend that if any of you don't want to take a chance on getting an F, like, just realize that. And I looked around the room and I was like, I don't know if I want to work that hard, right? Like I had a plan. I knew I wanted to get on Wall Street. I was thinking about, you know, there was no home, like going back to South Central there was nothing there for me. So it was like, I need to make it here, get to a good job. And the last thing I need right now is to fail a class. And why take that chance, right? And so my ego may want to say, hey, I'm as smart as anyone else in the room, but there's a certain reality check that says, hey, let me just step back and like stay focused on what my goal is. And so in the same way here, you know, we just have to stay focused on what our goals are and not get caught into the ego of saying, hey, I need to be right? And as soon as you get over that, you can now shift the odds into your favor. The casino in Vegas knows they're going to lose some hands, right? They're just going to lose some hands, but the odds are, if enough people keep coming and the longer I keep you sitting at the table, we're going to make money. And so find those trades in your business to have the odds in your favor. And the odds don't mean you have to be more than 50% correct, right? And I think we have this false belief. I mean, think about baseball. If you're a 300-400 hitter, you're a superstar, right? I mean, And I mean, that means you're missing 7 times out of 10, right? That's crazy. Yet you get paid millions and millions of dollars to miss 7 times out of 10. And it's the same in this business. You can be wrong a lot, but get the odds in your favor. So maybe there is a tail, but price those tail assets correctly, right? Maybe there's some great assets where you know you're going to make a fortune on them. Price those things accurately. So even when I sell loans, people buy loans from me because I don't have anything to hide. I'm not trying to sneak anything by people. I know how to make money on a non-performing asset. I know how to make money on a performing asset. I know how to fix up a house. I mean, the fact is, I have to look at what's the time value of money, and I know someone else is coming in. They maybe I want to know, how much do you need to make? And if they need to make 20, 30%, I have to say, am I willing to lose 20, 30% as a seller, right? So we may not have any business, right? But at the same time, I may find someone like, listen, I'm winding up my fund now, and I'm in negotiation with some buyers right now. And I told the guy, I said, listen, I'll go through every asset with you. This is what it is. I have nothing to hide. But the fact is, if you need to make more than 10% unlevered, there's probably not much to talk about, right? Because I might as well work it out myself, right? And you're dealing with a guy who's done 7 non-performing funds and 1 performing loan fund, right? And so I'm whether it's performing and non-performing, it doesn't really matter. I'm not going to give things away. And that doesn't mean other people won't, or a bank or some other institution who has some other thing will, but just let's not waste our time. And so I say that just to say, like, figure out what your return target is. Like, maybe it's, and for us, we found, many times we're the first, right? So we were the first to get a credit facility and non-performing loans from Nomura Bank, right? So we ended up with this $100 million credit facility. I got totally shafted by the lawyers because if any of you guys get credit facility, here's a good piece of advice. Make sure you tell people it's a small amount of money and then change the dollar amount later. If you're going to get a $100 million credit facility, tell them you're only getting $5 million. And then at the end, all it is changing from 5 to 100. It's numbers on a document, right? But as soon as they know it's $100 million, they automatically going to charge you way more money. So, I mean, we ended up paying, because we had to pay for Nomura's attorneys, we had to pay for our attorneys. I'm embarrassed to say we spent like $800,000 on legal.
Wow.
Right? I mean, it's a travesty. Now do the same thing for $100,000 or $200,000 or $50,000. I mean, there are a lot of factors that go into each deal, but the fact is, just stick to what you know. Look for those opportunities. Get advice, right? I mean, I'm available. Scott's available. Reach out to people who've done it. This is not new, right? Some of the circumstances may be new in terms of how we got here, but buying a mortgage note is not new. Foreclosing on a mortgage note is not new. Short sales are not new. Deed in lieu of foreclosure is not new. Getting a loan reperforming is not new. Selling loans that are already in some crazy status is not new. Fixing up a house is not new, right? I mean, there's nothing new in it. I love this business. I came from more of the hedge fund kind of, trading world, and where you're just trading prices, right? Real estate is awesome. I've got hooked because there's something tangible. Whether you're raising money, like everybody deals with real estate. Not one of us does not. I'm totally, Stanford probably kill me for all my double negatives here, but not one of us, right, don't deal with, real estate, right? Whether it's your office building, where you work, where you live. I don't care if you rent or you own, you go to a restaurant, like real estate is part of our lives. And so it's easy to go to a client and say, this is what I'm doing. And for them to just say yes or no. Doesn't mean they all say yes, but the main thing I want to get to is yes or no, right? So I don't waste my time. While we're on that, I mean, I don't mean to take you off topic at all, but one thing that I think would be really, really helpful for everyone, one of my greatest, mentors that helped me in sales, because I started, I was a nerd, right? I mean, I'm a smart guy from Stanford, and I didn't know anything about selling. I thought if I just showed you my spreadsheet, right, or showed you my presentation, and I had a greater return and a smaller standard deviation. Like anybody knows what that means, right? Like the fact is nobody cares about your alpha, right? I mean, what people care about is, can I trust you? Do I like you? Are you gonna, return my calls when I call you? I mean, basics, right? It's just the most basic thing. And I remember Zig Ziglar really got me over that, Dallas, Texas native guy. And I'm now good friends with Tom Ziglar, his son, and Howard Partridge, who now heads up his whole training and everything. I'm a Ziglar certified speaker. And, the fact is, the thing that really resonated with me was be an assistant buyer. So if you're working with an investor, help them get what they want, right? There's an old saying that he says, if you help enough other people get what they want, you can't help but get what you want, right? And, some of us may call that karma or whatever, but the fact is, help other people get what they want. Don't try to just focus on yourself. And that's helped me so much along the way, because maybe I can't help the person, but Scott can. Maybe Scott can't, but Todd can, right? And it doesn't mean that it's going to reciprocate exactly in that way, shape, or form, but over time, if you're committed to your craft, right? I mean, great teaching says, see a man skilled in his craft and he'll sit before kings, right? I mean, the fact is, if you're great at what you do, you'll sit before kings. How is it that some kid from South Central LA now works with 2 billionaire families, right? And, if I can do it, any of you guys can do it, right? I mean, it just, that's the reality. We all have to work hard, right? You can have talent, but, one of the things I talked to my daughter about, who's doing travel volleyball, but it's like, hard work will beat talent when talent doesn't work hard.
Mm-hmm.
Right?
That's the truth.
And so,
not saying no and continuing to show up and show up and show up and don't think, we all have hiccups. We all get kicked in the knee and the teeth from time to time, but just brush it off, step up, and keep going at it, right?
Exactly.
Yeah. What questions, I'm throwing it up here for if anybody's got any questions out there for Todd here before we dive into it. We're doing well. I do like to ask, what do you like to bake? If you're working at your wife's bakery, what are you a fan of bacon wise?
Oh man. So, all right. So little plug, go to sweetrusticbakeshop.com. And my wife does a ton of croissant-based items. So croissants are just the best. I mean, if you like bread and you like butter, a croissant is bread and butter. I mean, and it's fluffy. So it's like, when you eat sushi, you're like, did I even eat? Right? You're like, I'm full. And then like an hour later, you're like, where's the steak? Right? I'm hungry. Like, are we going to dinner or what? Right?
Second dinner.
I mean,
second breakfast.
Yeah, exactly. And that's exactly what a croissant is like, because it's like, I mean, if I didn't see how much butter goes into it, I wouldn't ever believe it's like that fattening, because it's so light and airy, right? It's so fluffy. And so I say anything that we make that's croissant based is just delicious. So we do this thing called a cruffin. It's croissant dough in the shape of a muffin. Then we can fill it with vanilla bean pastry cream, Nutella, guava, cream cheese. That thing is just delicious. We also have this fruit Danish so it's like this, I don't know, a beautiful shape Danish that my wife cuts perfectly, and only she knows how to do it here, but fill it with sweet mascarpone cream and then top with fresh blueberries or strawberries. It's like biting into a pillow, right? It's just like a pillow with fruit on it. It's great. So I'm the number one taste tester. I'm making sure the community's safe. That's my job.
Yeah, we know that the way to your heart is through your stomach, right?
Yeah, exactly. Yeah, she had me early on because of that.
I got a couple questions here. Wesley asked a question. What would be the greatest challenge, in your opinion, to small investors if there is a change in the administration?
Yeah. Well, yeah, for sure. I think step one is, if there's a change in administration, I think we're going to end up with more regulation. I think we're going to end up with higher taxes. I think we're going to end up with, some headwinds from an economic standpoint, meaning, Trump is a business person, right? And this is, I try to set up political, arguments or discussions, but the fact is, like, from an economic perspective, the policies have been great, and he's got a great team. I mean, the people he has on his team are super smart people that know how to make money. So whether that gets to the right people in society and all, we can debate that all day long. But the fact of the matter is, if we have a change in administration, I think you have to be very aware of, will it be harder for me to do certain things, right? Whether that's raising money, whether that's being able to, get licenses, whether that is, I don't know. I mean, I think the biggest thing that I would say would be the big macro factors, not so much the details, but where are we going? Like, will real estate be able to go up, 10% in a year versus 1% in a year, right? Because interest rates are low or high, or, those types of things. So I would be more focused on who the administration's team of professionals are, like who's his cabinet, right? Who's going to be, the people that he's listening to, maybe even more so than that person themselves, because it may not be like, I don't see Biden as like the greatest economic mind out there, but he could have a great economic mind on his team, right? So I think looking at not only the head guy, but who's he bringing around to surround himself with, because just like we can't do everything by ourselves, I mean, I can't only imagine what it's like being the president, right? I mean, we all should be saying, prayers for our leaders these days, because they all have impossible jobs. I would not want to be the mayor of any city with rioting and protest today, whether they're making the right decision or wrong decision. It's really easy to, what do they call it? Monday
morning quarterback. Yep.
Yeah, Monday morning quarterbacking, right? And it's easy in hindsight to say what should have been done. It's really hard to make those decisions in real time. And so I just give credit to all these guys who are public servants, regardless of the situation. But I would say step one is just big economic things. But that's just, hey, that's a macro effect. But then what's you got to get back to your local market. Hey, how's real estate in my market? What's regulation like in my market? So, I'm in Florida, long foreclosure timeline, right? Texas, short foreclosure timeline, right? And so, but just knowing, your market is really important, but that also means a difference in pricing, right? So buying in Florida, cheaper, Texas, more expensive.
Yeah, that's the truth. I mean, you gotta know your market and specific things that happen. Florida had a longer foreclosure time frame back when you first got started, and then you look at what happened in like South Carolina with the the governor of the AG canceling foreclosures or suspending foreclosures for a year. That was a big thing back when we got into that aspect of things. So we're probably going to see some of that happen. It's just a matter of seeing what's going to shake out from the government or the Fannie Mae and all these forbearance agreements and kind of going from there.
Absolutely.
Scott Brown asked a question. Scott is with USAPrivateMoney.com, but he always says, what do you see as your next play, is his question. And kind of go from there.
Yeah, sure. So thanks for the question, Scott. I think, number one, I don't know, right? I'm going to be the first to say, I have some theories, and I'll tell you what I'm looking at. And I think some of it is very kind of just what we all can see, right? I mean, there's going to be opportunity in retail. There's going to be opportunity in hospitality. There's going to be opportunity in, anything that has like a gym or, so many things, right? There's a ton of office space. I mean, will people go back to offices? Will we see what we saw in residential markets like we did in 2008? I don't see that happening at all. I mean, it's a very different environment. But I do think things that I'm looking at are, because I'd like to stick with what I know. Do I expect to go out and get into managing a bunch of retail shopping centers? No. Do I expect to go out and manage a bunch of hotels? No. Will there be opportunities for people to do that? Absolutely. Will I be the beneficiary of those? Most likely not. I'll never say never, but most likely not, unless, I end up getting, the W hotel on the beach here for 25 cents on the dollar. I might take a shot, right? But I don't see that happening, at least with all the stimulus and the way the government's reacting. They've made it clear we have an unlimited checkbook, and we're going to print as much money as we need to for as long as we need to. So market, just calm down. We're behind you, and there's going to be money. So with that backdrop, I just don't see prices taking this plunge that we would have seen with another maybe administration or with some other factors going on. So I think we're in my space, which I consider my space being residential in nature, and that can be multifamily. That could be some mixed use if it's mainly residential, but single family rentals. I think there's going to be a lot of opportunity in completing construction. There's a lot of multifamily projects around the country that have been started that were highly levered, and they're going to need to be recapitalized. And, you know, once again, you make money by location and you make money when you buy. So I think if you can get the right location, real estate, you're going to find opportunity. I think there's going to be a lot of opportunity with guys who were over levered in Airbnb, right? The fact is, you know, they were getting $5,000 a month in rent in an Airbnb, and market rents are $3,000, right? And people aren't rushing back to Airbnbs anytime soon. So I think, you know, there's going to be opportunities like that. And I think if you can find the loans, you know, I love the loan business. I mean, the fact is, there's no way I could have ever managed 8,000 properties, not overnight. It was hard enough to manage 8,000 loans overnight, right? But 8,000 actual properties, having to manage them, I mean, that's a nightmare, especially all across the country. These were not like all in one geography. So the note business is a great business because you have so many different exits. You can get it reperforming and just clip a coupon. You can sell it if you just don't know what to do with it. You can get the piece of real estate. You know, there's just so many things you can do with it that you don't, it's not like like if you buy an apartment building, all you can do is rent it out, right? I mean, that's pretty much it. You can maybe lever it, sell it eventually, but you're not going to buy it day one and sell it day two and make money. You could buy a note day one and sell it day two and make money.
Yeah, I totally agree to that. I mean, when I look back, you know, that's what I cut my teeth on, was buying commercial loans from, you know, Capital One, some of those others on smaller, the sub-million balance loans that a lot of the banks like to get off their books. But that was the thing. You buy a note cheap enough, you can flip it the next day if you need to, or get it.
Exactly.
You know, you go through the foreclosure process, you take it over in receivership, and then sell it at the auction if you need to. So
exactly. Yep.
So many things out there. Scott also has a follow-up question. He goes, what kind of fund would you set up if it was your first fund? A Reg D, a Reg S, crowdfunding?
Yep.
Any opinion on that?
I mean, I think, you know, the ability to raise money today is as great as it's ever been. I mean, there's so many, the Jobs Act under Obama really created the opportunity for all capital raisers to raise money without limitation. If you can't raise money today with the regulations that are today, you probably will never raise money, and just find something else to do, right? I mean, there's no shame in that either. The fact is, raising money is hard, right? And but everyone needs to raise money. Trump needs to raise money when he's building a hotel, right? I mean, like, the fact is, we all raise money for different purposes. So I've used Reg D for all of my funds, and we've done primarily 506Bs. So 506B is accredited investors only. I mean, quote unquote, you could probably, I forget how many now.
30, 35 in there.
Yeah, whatever it is. But the fact is, you shouldn't be doing it to avoid that. I think the idea is, I'm going to raise money from accredited investors, and maybe if there's one or two over here that was not, you know, nobody's going to get mad at you or shut you down. But today, like with Reg A, with the crowdfunding regulation, you know, Title 3 or whatever, I forget what it's called. You can raise money. I mean, I think Reg A is a gold mine for people who can get it right, because you can take money from everyone, right? You can. There's no, you know, you don't have to only deal with accredited investors. Our latest funds have been 506C, so they're accredited investors only. So there is no like safe harbor for 35 non-accredited investors, but you can advertise. So you want to do your Facebook, your Instagram, you want to shoot out a blast email and say, invest in my fund, you can do it. So we've been using 506C, which is interesting because I only have 3 investors, but nonetheless, I'm a student of capital raising, and I have a Reg A doc ready to go. I've done 506C and I've done 506B. I think Reg S, to the question, I think is with international investors. but I find, you know, even with my international investors, if they're astute enough, many of them are trying to get money to the US. So even my international investors today are technically US investors because they have Delaware corporations to kind of shield themselves. So, so I would stick with my primary goal would be Reg D or Regulation A would be where I would go. I think, you know, the great part with Reg A that I'll throw out there is you have this ability to do testing the water. So, you know, before you go spend a bunch of money on documents, you come up with a term sheet, come with an idea, a strategy, and do indications of interest. See if you can get anybody interested in investing with you, right? Before you spend a penny on, you know, $25,000, $30,000, $50,000 legal documents. And, you know, today I think the legal documents, I don't think you know, I've probably spent far too much in legal over the years. I really think talk to the people on this call, talk to people like Scott and myself. You could probably save yourself a ton of money on legal docs. The main thing is you just want to do the right thing. You know, docs are there to protect you and the investor. But I think there's a gold mine in Reg A would be step one. But if you don't want to go through that, there's tons of people who have Reg D docs. Probably get them for free off the internet somewhere and just change a few things.
Yeah, well, and that's the thing is the paperwork is not what's going to raise the capital.
Yep,
you know, the paper
exactly.
there's to protect it. You still got to go out and market it. You still got to go out and press the flash. You still got to go out and meet the investors where they're at or get introduced and network like crazy. And, you know, that you said at the very beginning, you got to go out and meet people and ask for introduction, ask for references or referrals and do the right thing. And, but have your, like you said, your lane and know what you're actually going to talk about and why it's a good thing and know that, not show, you know, percentage, but build rapport and kind of go that route and expect to spend some time working on that, right, Todd?
Yeah, absolutely. Absolutely.
What do you see here? Got a question from somebody here. Wesley says, okay, what are some books, magazines, things that you like reading or recommend help investors or they increase their acumen for buying mortgages? Anything in particular?
Yeah, I mean, I'll be frank. I more than books and that kind of stuff. I really think this goes back to who you know, right? I mean, this like you need to network. I mean, obviously networking is changing in this environment, but we're still networking here, right? So you know, knowing someone like Scott. Imagine how many people, Scott. I mean, how big is your database, Scott? How many people?
It's big. But that's the
right?
thing. I think we met originally because you responded to one of my emails back like 6 years
exactly.
ago. You get the green emails.
Yes, absolutely. Right. And so, you know, I mean, the one thing I mean, I look up to Scott because he's someone who stayed in his lane, right? He's made himself the expert when it comes to notes. Right. And that's great. I mean, and he's done all kinds of notes and he knows all kinds of people from people who are just starting to people like me and people beyond me. And so I think, you know, just I think networking and talking to people is going to be much more valuable than any book. And this coming from a book smart person. I don't think I think the things you need books for would probably be something related to your personal development and, you know, just making sure how to really communicate with people, you know, understanding. I use the DISC assessment in all of my dealings, even with investors. I use the DISC assessment. I mean, all the way down my $1 billion investors, I've had to sit them down and have them take a DISC just so I know how to communicate with them, right? And so I would spend more time knowing and understanding people than I would try to understand any nuance about a mortgage, because that knowledge only so much of it's going to be in a book, and there's probably a lot of great people that have books, but start with the people first. So, hey, Scott, and then maybe Scott has a book. Great, try his book. But the fact is, I would start with the people that have done it, right? Because the knowledge is out there. Like, Todd, how do you foreclose on a mortgage? How do you fix it up? How much should you spend to fix up the property, right? You know, what are my other options? How do I sell it? You know, what if, you know, can I just do one loan, right? I mean, like, there's enough people in this meeting that can answer that question or those questions. And so I'd start with people more than, you know, books.
I think you said something too, and I think everybody heard it. you got to be mental sharp. And when you talk about Zig Ziglar and having a strong mental aspect and not giving up and really getting your headspace, because we all know if you want to go from making 50 grand to 100 grand, you've got to grow into that 100 grand person. If you want to go from making 100 grand to $500,000, you got to grow mentally into that space, right, Todd?
Yeah, exactly. I mean, one of my favorite people to goodness, now it's obviously running a blank on me. Goodness, what's his name? Yeah, anyway, I'm forgetting his name right now. But the fact is, when you want to get a raise, the raise will come when you change, right? So we have to be the person first, right? I mean, I think that's it. That everything we want. If you're having trouble in a marriage, most likely it's you, right? I mean, it's humbling and it hurts to say that, but it's not the other person, because I have a customer who comes in here, he's been married 6 times, right? Like at some point it's not the other person anymore, right? I mean, it's you. And I think it's the same thing here. So, if something not working in your business, something not working your note business or capital raising business, you need to change, right? And I love that, because now I'm not pointing a finger at anyone. Like anything that needs to change, it's on me, right? If I'm not where I want to be, what do I need to do differently?
I love that, and I think that's a great spot to end it here. Do better.
Perfect.
Absolutely, Todd. Once again, thank you so much for taking time out.
My pleasure. My pleasure.
Your baking days there for you, having a good time there on the croissants.
Absolutely. It's so funny because hopefully this doesn't offend anyone, but God's been so good to us. I mean, my wife has had the 2 best months in her business over the last 2 months since we started. So, it's just a testament to like, hey, my mortgage lending business in terms of like making new loans, originating loans, it's dead, right? Commercial lending today is not where it was 2 months ago.
Right.
But at the same time, there's been this window where it's like, hey, you can sit there and you can sulk and say, oh, what used to be, what could have been, or whatever. Or you can go where there is opportunity, and guess what? There's a lot of business opportunity in croissants and cookies, and like people are depressed and they want to eat, right? I mean, the fact is, feed them, right? And so, there's opportunity in all kinds of crisis, and Sweet Rustic Bake Shop is a perfect example of opportunity being there. So it's been a pleasure. Thanks so much for inviting me, Scott. And anybody who needs to reach out to me, feel free to reach out to me through Scott or through LinkedIn or anywhere.
Perfect, Todd. Yeah, USDV.com. The website, Sweet Rustic Bakery there in Florida.
Fort
Definitely
Lauderdale,
check it out. There you go. So, hey, Todd, enjoy the rest of your weekend. Give best to the wife and kids, all right?
All right. Take care. Bye-bye.
All right, guys. That is going to wrap it up for this session. We're going to take a short little break here, let you get up a stretch. A lot of great stuff there from Todd, a lot of lessons, but don't go anywhere. Trust me, as so many have asked, and Todd hinted to a little bit, I'm really excited for this next session. My buddy Brian Ellison come on and share some really great stuff here about if you're struggling in raising capital, being able to raise the one day raise, capital raise, how you can raise $2 to $5 million. Pretty relatively easy. Brian's an expert at this, absolutely phenomenal at what he does. And so I'm really excited about this presentation that's coming up here, and he'll share with you some of his nuggets, how he does it. And